Hey guys, happy Monday. Long time no see. New office. I feel like a printer, so it looks like I'm really actually working sometimes. So that's weird. It's been a few weeks. So welcome back. As you guys join me, please let me know you're here. Say hey. I'm just gonna get everything organized the way I like it, which of course I never remember until I'm logged in. So I hope everyone has had a great last couple of weeks, enjoying the weather. If you're in a place with good weather, we've been off and on. We had like the biggest snowstorm, and then it was nice, and then we had another little snowstorm, and now it's good. Hey Joyce, hey Mark. I'm gonna give everyone just a few minutes to log in. What else do I want open? I never really know until I'm halfway through, and then I'm like, oh wait, I want this screen open too. I want this. There we go. I have no coffee in front of me. What are we gonna do? I have water. We had a great weekend. The weather was really nice here. Still busy. But good. Let's see. I want to find. Let me know how your guys' weekends were. Did anyone do anything fun, exciting? My husband and I put a contract down for a new house. I mean, it's kind of big. So we're really excited about that. I got my hair done. Always excited to do that. So yeah, I had a really eventful weekend and did a lot of work. So much work. Okay. As you guys, I'll jump in again. Say hey. Joyce has said hey. Marcus said hey. Let me know you're here. If you are jumping in and you do not know me, I am Bree Beers of Bree Beers and Associates. My firm, we work specifically with small business owners or small businesses and their owners. Our goal is to, help you guys shed light on what you don't know. We recognize that in this tax world, in the accounting world, as business owners, y'all don't know what you don't know. So our goal is to just use our arsenal of tools and help you guys figure out what you need to know as a business owner when it comes to money, taxes, finance, accounting, all the things. So we have a ton of free resources out there for you, including this YouTube channel if you're watching it on YouTube. If you're watching it in the Facebook group, that as well. If you're not watching it in the Facebook group, head on over there. It's Money, Tax, and Finance for Small Business Owners. We not only have these trainings, but we have, we post things daily, little tips and tricks. And if you are watching this on Facebook and not following me on YouTube, you should do that as well. Because on YouTube, every Wednesday, we post really quick little videos on some of the most commonly asked questions. These are like 5 to 10 minute quick videos for you guys. So there's a whole library over there. And we're growing pretty quickly, so it's fun. Melissa found me through Jamie. Jamie is one of my best friends, and pandemic and COVID and all that actually brought her and I together. We kind of knew each other, not that you guys asked, but here you go. We knew each other through Rise, through Rachel Hollis. We had gone to a conference and we were part of this Facebook group of people who went to that conference. So we kind of connected, realized that we were two of what seemed like very few finance and accounting people or women in that group. And so we kind of connected there, and then pandemic happened, meaning PPP, the CARES Act, all those things happened. So us and a couple other CPAs kind of all bound together to really learn all the new guidance, how it affected you guys as business owners, what you guys needed to do to capitalize on these things, all the things. So that's that. So today, normally you guys, I have a 9:00 training as well on something. With the craziness that is tax season, I had to, and we've got a lot of great new clients, and I wanted to focus on those clients and give a little extra time to them. But I kept this 9:30 Q&A and update time, which I found was really what you guys were needing. That's where you guys were really, needing help and guidance. So this is the Q&A and updates. And so put your questions in the comments as you guys have them. Anything, taxes. We're going to go over the changes that have happened in the new economic rescue plan. Probably didn't call it right. didn't really memorize the name. I memorized, I remembered what was in it. So we're going to talk about what's happened in there. Ask your questions about that, about taxes, all the things. All right. That is what this half hour is for. It is for you and you guys. If you are preparing your own tax return and you have some questions, that this is the best place to ask those. All right. So let me grab some water and we will get started. All right. So one of the biggest things that's happened in the last couple of weeks, you guys, is that tax day for individual tax preparers has moved from April 15th to May 17th. All right, they're giving that extra month, and we'll kind of talk about in a second why that is, what's changed and why they needed that extra month, or why the IRS decided taxpayers needed that extra month. But April 15th, if you're an individual, no tax return due. What you need to make sure, however, is whether or not your state has conformed to those IRS guidelines and also moved their deadline. I haven't checked in the last weekish, but last year when the due date got moved to July 17th, 41 states conformed. There's a handful of states that don't have state tax, so their state income tax, so they didn't count. But there were still 2, 3, 4 states that still had an April 15th filing deadline. So if you're in one of those states, just check with your state to make sure that they've bumped their income tax deadline for your individual tax return as well. All right. So as long as they have, you're good. And the reason that they have moved this deadline, there's a few reasons, but the biggest ones are because this most recently passed stimulus package had some things in it that affected 2020. All right, it's going to affect your 2020 tax return. And so they were like, okay, from a taxpayer's point of view, you guys, the great news is nothing's going to change on your end. You're not waiting for revised forms, or, you're not waiting for some new form that they decided they needed to give you guys. This month really is for the preparation side of things. So if you prepare your own tax return, and you via TurboTax or H&R Block, or if you have a tax preparer, they need a little extra time, and the IRS needs just a little extra time to process. So that's why they've given us this extra month. All right. The other part being that in addition to extending your tax return due date by a month, they've also extended when your payment is due, right? So your payment, if you owe money when you file your tax return, you don't owe it until May 17th. So the second part of that, of why they extended that deadline, is to give you guys an extra month of having that cash in your pocket, or being able to come up with those funds without accruing penalties and interest. Okay, so May 17th is our new day. That's our new deadline. All right, you can still file an extension if you're not ready by May 17th, just like you always can every year on April 15th. That is going to give you till October 15th to file your personal tax return. All right, they say October 15th. More coffee, Brie. So it'll still give you that extension. So if you're not quite ready to file, you can file that extension and get that extra 5 months now instead of 6 to gather your return together and get that return actually filed. Remember though, you guys, if you have money due with your return, okay, it's still due. And so if you don't pay that on May 17th, it is going to start accruing late payment penalties and interest. Okay, so if you're like, I got to get my return done, but I'm probably going to owe like $5,000. If you have the cash, pay it in now, even if you only have a piece of it. Okay, let's say you're like, God, I'm going to owe about $5,000, I think, once I get my return filed, but I only have $1,000 sitting in my, discretionary fund account. Pay that $1,000, whatever amount you possibly can before that or by that May 17th deadline. So at least you're minimizing those penalties and interest that are going to accrue between the filing deadline of May 17th and when you actually file your return. They are very small, you guys. Those I want to say they're like 0.5% per month. So that it's not a hefty amount, but unnecessary. I am so against paying penalties and interest if you can't avoid it. Okay, so I'm going to jump into the comments real quick and go through some things in here. So Melissa says, my return was accepted. Fantastic. On February 13th, person, still no refund. Yes. And let's talk about that real quick, because the IRS, normally, you guys, the IRS pays out refunds every other Friday. Okay. And they're still doing that. However, they are taking longer to process returns. You said it was accepted. That doesn't mean they've actually processed it. That means the IRS has it. Whatever date they say they accepted it is the date they will say your return was filed. Okay, but that doesn't mean they've actually had whatever machine or system or person go through and verify the information. Okay, one thing that is making refunds take longer this year is if you the earned tax credit, not the ERTC, not the employee retention credit that's new this year, but the earned income credit, the EIC, the earned income credit. If you've ever taken that, that always takes longer to process a refund because they review that in more depth. And with 2020 tax returns, they are reviewing if you're requesting a stimulus payment. So what that means is, when people got their stimulus payments back in March, and then we got that second stimulus payment at the end of December / beginning of January, okay? That was a prepayment of the credit that we get on our 2020 tax return. If you got your full amount and you're good, that's not going to affect your tax return filing and your refund. However, if you didn't get it, the full amount or any amount, and you were due, and so with your tax return, you're filing the extra form that says, yes, you need to pay me my stimulus, my credit, okay, they are taking longer to process those. They are definitely, they've been very clear that they are taking longer to process those stimulus refund tax returns. Okay, so let's see. Mark says, LLC with S Corp election. Does owner pay have to be at the max when Social Security caps out before you take a distribution? What is the way to do it? Owner W-2 pay and distribution mix. Okay, great question, you guys. So I'm talking to my S Corp owners right now. I had to take it down because it was covering my face. So if you're an S Corp owner, you are required to take a reasonable salary, right? Reasonable compensation, okay? We do a whole video, I think, on this. Check out my YouTube channel. But Mark, for you, you're like, when can I start taking distributions? Because if you're an S Corp owner and you take all your money out in distributions and you never run a payroll, red flag, you're gonna get in trouble. And what's gonna happen is the IRS is gonna come back and say, you should have ran a reasonable compensation for this amount of money, and you took out this amount of money. Therefore, we're gonna reclass this tax-free distribution to payroll, right? To a W-2 payroll. Now you're gonna owe payroll tax on it, okay? And the penalties and interest on late filing of payroll, very substantial. Okay, so you want to make sure you're running a reasonable compensation as an S Corp officer. What is a reasonable compensation? Unfortunately, there's not just a nice little chart or easy cheat sheet to say, oh, I'm an accountant, this is how much I should be paying myself. No, there's not. It is a very complicated formula. It's not even a formula because you and I could run the exact same questions and have the exact same amount of money and still come up with different reasonable compensations, all right? But some of the questions to ask. So if you were ever to get audited, what is the IRS going to look at, okay? The first thing they're going to look at is how much you paid yourself in W-2 wages, all right? And if it's a number, and they're going to take that number. Then they're going to take that number and they're going to compare it to how much would you have had to pay somebody to do what you're doing for your business, if you had to hire someone, okay? So if how much would I have had to hire someone to be the CEO of my business? Or how much would I have had to pay myself to be the principal accountant in my business, right? So they're gonna look at how much would you have had to pay an outside person to do your job. The second piece of the formula is how much would you have gotten paid if you went out and worked for somebody else? All right, and this comes into play because, you guys, a lot of times an S Corp officer will run a payroll, but they'll run it for like $24,000 or $30,000. But let's say they're an accountant, and let's say you're and they're doing everything in the business, right? Maybe they have one employee or two employees, but for the most part, they're doing everything. You're like, wait a minute, there's no, $30,000 is not a reasonable compensation for everything you're doing in the business. And it's not what you would pay somebody if you were to hire them to come work in your business. So that's going to be like, okay, so if those numbers are good, you get little green check marks, right? If they're like, okay, those numbers don't align with what you would pay somebody or what you would get paid to do what you do in your business, right? Then they go to the next thing. They're like, okay, well, did you pay yourself distributions? Okay, because if you don't pay yourself any distributions, let's say you're just keeping the money in the business, right? Maybe you're having a rough year. Maybe you're trying to save up a, business savings account because you're ready for the next, emergency pandemic, thing. Words free. If you don't pay yourself, if you don't take any money out of the business, it doesn't matter, honestly, for that year, what you calculate your reasonable compensation to be. Because if you don't take any distributions, they have nothing to reclass to payroll. Keep in mind, though, that when they're looking at a year, they will look back 3 years, okay, to make sure you were taking reasonable compensations. So let's say this is my first year. I'm starting up. I didn't pay myself a salary, but I didn't take any money, okay? Who cares how much I would have paid myself? Second year, same thing. Who cares? Third year, I'm finally making money. I'm good. I want to take $100,000 out of my business, okay? And they're going to, but let's say I found that my reasonable compensation was $50,000, right? You might be able to get away with just taking that $50,000 reasonable compensation. But if you then take more out in distributions, they're going to go, you know what, actually, we need to also have that as payroll, because in these last 2 years, you didn't pay yourself any payrolls. They can get a little tricky. Guys, knock on wood, I've never seen an audit for S Corp wages, okay? So it's not something they focused on, at least in the last 10 years that I've been doing this. That's not to say that they're not going to, okay? So get your ducks in a row, be doing it the right way. And I highly recommend you guys, sorry guys, my dad's calling. I highly recommend you either use a professional, a CPA, an accountant. There's softwares out there. I think there's a RC reports, reasonable compensation reports. It's a application online that you pay a certain amount of money. They'll run that reasonable compensation for you. But use something, okay, that gives you support. Okay, so when we do this for our clients, we run a reasonable compensation report for their zip code, what they do, everything. And then we put that in their file, and we say, okay, we ran a reasonable compensation for your area and it's at $65,000. You're running a $65,000 payroll, that should be good. And then we track that for you guys. Okay, let's see. It's not scrolling. There we go. Mark, you like to cover up my face. I should just be taller. Our CPA must not know much about ERTC. Gave him Jamie's worksheet, filled out in a PDF so he wouldn't steal her work, but has been 3 weeks. What is a reasonable charge for ERTC 941X for 2020 quarters 2, 3, and 4? Aprio was trying to charge 10% of the credit, which seemed extreme. I would be wary of anything that charges a percentage of your credit, okay? Because for me, this would be, I'm not doing ERTC work yet, but I would probably, if I did, I would be doing it either on an hourly basis or I would be doing it on an per employee basis, right? Because that's where the time's going to come in. If I just have one employee, that ERTC is going to be way easier than if I have 100 employees. Percentage-wise, maybe they figured it out and that was an easier way to do it. But let's see. So if you're getting a $14,000 credit, let's say you have one employee. I'm just kind of trying to work through the numbers here, Mark. Let's say you have one employee and you get the full, is it $5,000 per, or max $10,000 in 2020. So you're getting a $10,000 credit for that one employee. They're charging you $1,000. I don't think that's unreasonable at all. That said, but this is something that I think doing it, like one employee, right, is going to be it's not exponential, like one employee versus 10 employees. 10 employees is not going to be 10 times as hard, right? It's going to be harder and more time consuming, but not 10 times harder and time consuming. So that's kind of why I don't like the percentage method for billing, but to each their own. Everyone does something different. But let's say you're getting $100,000 credit and you're paying $10,000. I mean, you got to think about that return on investment, right? That's $90,000 in your pocket you didn't have. So I don't necessarily think it's extreme. I wouldn't charge, but maybe I'm doing it wrong. Maybe I should be charging a percentage. But I don't think that I don't think there's any amount that's, as long as you're, getting money back, this is money that you probably didn't know if you qualified for, maybe you don't know how to qualify for it. And so extra money in your pocket, I think, is worth whatever. I hate to say it's worth whatever the CPA is going to charge, but I mean, to me, it's worth it. That's just my 2 cents. So let's see. Oh, okay. Sorry, I skipped you. I skipped one, Melissa. So Melissa was the one that said she filed her return. It was accepted on 2/13. She still didn't have her refund. She says, when I check where's my refund, it says processing. We will let you know when there is a return date. I don't know what the last part means, but processing means they're working on it. And then she came back and says, I have 4 kids, so I do the EIC and child tax credits. So that's why they're taking longer, Melissa, unfortunately. So I wouldn't be worried about it, though. They just want to make sure that with those credits, because they're, those can be hefty credits. They just want to make sure that there's not a miscalculation, that there's not someone, trying to get money they don't deserve or they don't earn, So, we already talked about that. All right, we got a few more minutes. Looks like I've gone through all the questions, but let's talk real quick about some of the stuff that is passed. So, after water. So, some of the big things. So, if you have an EIDL loan, you now, originally, when you had an EIDL loan, you had 1 year until payments started being due. You now have 2 years from the time you got your EIDL. All right, they've extended that by 12 months. So that's a big one. PPP, if you are still on the fence, the original deadline to get a PPP in this new year was March 31st. They've extended that to May or until money runs out. So that's a big one, but I'm still, guys, if you want this money, get on it, don't sit on the fence anymore. Let's go get it. PPP, extended deadline, EIDL. Another thing with the EIDL, you guys, is originally EIDLs are emergency injury disaster loans, and they're capped at $2 million, and they're supposed to be 6 months worth of expenses, of operating expenses. When they originally issued them last year, they capped it at $150,000, even if your 6 months of operating expenses was more than that. Is it capped at $2 million or $200,000? I don't remember, but I know it's 6 months. So if they're reviewing files, and if your 6 months of expenses was more than that $150,000 cap that they put on your loan last year, they're going to be reaching out to people, who knows when, hopefully sooner rather than later. But they'll start reaching out to people to see if you want the rest of that loan. Keep in mind, it's a loan, it's not free money. So keep that in mind when you're deciding, do I need this money or not? But that's going to be out there. So back to this. What is the deadline to do a 941X for each of the last 3 quarters in 2020? That's a great question, because I stopped doing payroll. We used to process payroll in-house when I worked for my predecessor. And even when I first took over, we were still doing it, but we haven't done that. So let me just look really quick. Amended. Because with your income tax returns, you have 3 years. You have 3 years from the time you file or the due date to amend for a refund. The IRS has 7 years to go back and check you if for fraud or for adjustments. How far back can you amend payroll returns? They follow the same route, 3 years. So just the same as income tax returns, which I was hoping was the case. So you have 3 years to go back. And let's talk about this emergency, this employee retention tax credit real quick, you guys. So this is big. This is really big, and it's something we didn't focus on a lot last year, because last year they said you can take the ERTC or you can take the PPP. You can't do both. Then they came out in December and said, okay, you can do both as long as you don't spend the exact same funds, like you don't spend your PPP dollars and you're on the same payroll that you're taking the tax credit. All right, so that opened the door. Once they opened the PPP to 24 weeks, that really opened it up for people to take both of these things. All right, so in 2020, this is up to, it's 50% of each employee's earnings up to $10,000. All right, and you can do it for second, third, and fourth quarter, and you have to have at least a 50% decrease in receipts from last year. Okay, so in 2020, so what it is, and it's a credit on your payroll reports. So if you qualified for 2020 and you're able to take those, you are going to have to file amended payroll tax returns. That said, you also cannot deduct the payroll that you're getting credited for. Okay, you can't double dip in this instance. So if I paid $10,000 out, okay, and I get a $5,000 credit, I have to reduce my $10,000 in tax deductible wages by the $5,000 credit I got. Sounds confusing. That's why you're not going to do this yourself. You're absolutely not going to do this yourself. You're going to hire somebody. I have a great person. Her name is Christy. She's amazing. She will help you guys out with this. And you're going to have to go back and amend them. That said, you can download, and I will put Jamie's link in here. My friend Jamie has a fantastic spreadsheet that you guys can use to see if you qualify. Okay, that you can do on your own. You can look back, you can enter some 2020 numbers into this spreadsheet and see if you qualify for this credit and see how much it would be roughly. Okay, and then at that point, if you do qualify and you're going to get a credit, then you're going to hire somebody to do this for you. Okay, a lot of your payroll companies will do it, so check with them first. But then, especially if you had a PPP as well, you're going to want a professional to help you because you have to balance that and make sure you're not double dipping on that money. Okay. That said, if you are taking it in 2020, you are going to have to amend your P&L, right? You're going to have to change your P&L so that you don't deduct those, so that you don't deduct the payroll expenses that you're getting credited. Therefore, I would hold off filing your business return. Okay, fill out the spreadsheet, figure out if you're going to qualify for the 2020 credit. And if you are, hopefully you filed an extension, you haven't filed your return yet. If you have filed your return, you can amend it. It's just amending income tax returns is just a bigger pain in the butt than just holding off and extending on that. Okay, and filing an extension and then filing it a little later. Okay, so that's that. What else do we got? Bree says, thanks. You are so welcome. Mark says, Intuit full service payroll will not do it for us. So much for full service. Yeah. And I'm honestly not sure which payroll companies. I believe Gusto and ADP both are providing that service, but I'm not positive. And I don't know about any other ones. But definitely, you guys, it's, think about it. If you're paying, like Mark said, 10% of the credit, if you get a $10,000 credit, and you pay $1,000 to a preparer, that's a great return on investment on those services. Okay. That said, as we're closing out first quarter of 2021, the ERTC is still available to business owners with employees. Okay. In first, second, and I believe now third quarters. And it's more this year. In 2021, your receipts only have to be down 20% compared to 2019. And the credit is up to $7,000. It's still 50% of employee wages, but capped at $7,000 per quarter instead of $10,000 per employee for the whole entire year in 2020. So they have increased this tax credit. So it can be huge for some of you guys out there. So if you are a business owner and you have employees and you've seen a reduction in revenue, download the spreadsheet. I wish I had it available. Let me see. Usually I pin all of Jamie's stuff Jamie Trell is the queen of spreadsheets, you guys. She makes the coolest spreadsheets and the most just practical, and they're easy to use for y'all, and they're just amazing. Where do I go? I don't know. I will post it in here when I'm done. So I'm not just sitting here while you guys watch me try to find it. But definitely Mark's used it. I'm sure he can attest to it that this spreadsheet is fantastic for figuring out if you qualify for the credit, so that you can then check with your payroll company to see what services they provide for applying for this ERTC, the employee retention tax credit, and then hiring someone to help you with it, whether it's a CPA. It likely is not going to be your CPA. Most CPAs are not doing this service right now because it's the middle of tax season and we're just at capacity as is. I have a great friend, her name is Christy, who is doing these consultation services for people and can help you. If you have a PPP as well, you're definitely going to want to employ her help. So I will post those resources here shortly. Other than that, I think that's it for today. So let me know, you guys, if you have any other questions. I'll peek for just a second. Doing a video on filling, Mark's, somebody, I don't know who it is, not Mark anymore. Do you know if anyone will be doing a video on filling out a 941 in 2021 taking the ETC? Our software fills out some strange fields and I do not quite understand what it is doing. Jamie will. If you guys are not a member of Jamie Troll's Facebook group, it's called I don't want to say it wrong. Let me look. I always have it open. It is financial literacy for women business owners. More than just women business owners are allowed in there. Or you can also follow her on YouTube. Jamie Troll, just type it in. She has like 15,000 followers, so she's easy to find. She will be the first person to complete this video who does it right. There are a lot of CPs out there giving what I believe is bad advice. Jamie does not. And so Jamie will probably have a video out here if she doesn't already. So check her out. Okay, guys, thank you for joining me. I will see you guys next week. Same time, same place. And I think that's it. All right, you guys have a fantastic week. Bye.